What if I told you that the stock market is not a place, but a living system where money is constantly moving between people, companies, and opportunity? And once you understand how it actually works, you start seeing the entire world of money in a completely different way. Because it's not as complicated as it sounds, it's actually built on just a few simple ideas. Let's break it down. Today, you're going to understand how the stock market really works in the simplest way possible. No confusion, no heavy finance language, just a clear picture you can actually remember. So imagine this first. Every big company you know, Apple, Amazon, Tesla, they all need money to grow. They want to build new products, hire more people, open new offices. But instead of borrowing all of it from banks, they do something smarter. They sell tiny pieces of their company to the public. These tiny pieces are called shares. And when you buy a share, you basically become a small owner of that company. That's it. That's the first big idea. Now let's go a little deeper. The stock market is simply a marketplace where people buy and sell these shares. Just like a normal market where you buy fruits or clothes, but instead, here you're trading ownership in companies. And this market exists to connect two types of people. People who want to invest money and companies that need money to grow. When these two meet, the stock market comes alive. Now here's where it gets interesting. Let's talk about how companies actually enter the stock market. This process is called an IPO, Initial Public Offering. It sounds complex, but it's simple. It just means a private company is opening its doors to the public for the first time. They decide how many shares they want to sell and at what price. People buy those shares and the company gets fresh capital to expand. After that, those shares start trading freely in the stock market. And from that moment on, their price is no longer fixed. It moves every second. But why does the price go up and down? This is where most people get confused, but the idea is very simple. It all comes down to one basic force: supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell than buy it, the price goes down. That's it. No magic, no hidden system, just human behavior. But now you might ask, why do people suddenly want to buy or sell? This is where expectations come in. People are always trying to guess the future of a company. If they think a company will grow, they buy its stock. If they think it will struggle, they sell. Even rumors, news, or new product launches can change these expectations in seconds. That's why the market moves so fast. It's not just about what a company is doing today, it's about what people think it will do tomorrow. Now let's talk about the people inside the market. There are two main types of participants. First, long-term investors. These are people who buy stocks and hold them for years. They believe in the company's future and don't worry about daily price changes. Then there are traders. They try to profit from short-term movements, buying low and selling high quickly. Both play an important role in keeping the market active. And when companies perform well over time, something interesting happens. They may start sharing their profits with investors. This is called dividends. It's like getting a small reward just for holding a company's stock. But not all companies give dividends. Some prefer to reinvest everything back into growth. Now step back for a moment. Look at the bigger picture. The stock market is not just about buying and selling. It's a reflection of human confidence. When people believe the future is bright, markets rise. When fear takes over, markets fall. It's emotional, logical, and unpredictable all at the same time. And that's what makes it so powerful. Because in the long run, the stock market has helped build some of the biggest wealth in the world, not by luck, but by patience and understanding. So here's the simple truth. You don't need to predict every move. You just need to understand what you own and why you own it. Because once you understand how the stock market really works, you stop seeing it as gambling and start seeing it as ownership. And that changes everything. If this helped you understand the basics, then consider subscribing, because in the next videos, we'll break down even deeper money concepts in the simplest way possible.